Derrick, good morning. Welcome back. Happy Tuesday, my man. How you doing?
Hey, Ryan. Good morning. I'm doing great. How about yourself?
I'm doing really good. Look, I've made this mistake the last two times that you've come on because I've just literally launched into asking you what stocks you're looking at, and then we just roll. So I'm going to go ahead and read this here first. Derrick Oldensmith, trade with Derrick all next week for free in his Pro Desk virtual trading floor. That's July 7th through the 11th. QR code at the top of the screen. Okay, now that I got that out of the way here, what do you got on deck? What is moving for you? I don't know if you heard the end of that, the Hood News article there. This has made it a crazy move here. Are you trading Hood? And if not, what are you looking at? What are the setups that got you intrigued right now?
Sure. So Robinhood's been on fire. It really has
Sure has.
been. But I am a big believer in not chasing price. So at this point, with
Yes.
this gap up after yesterday's move, you either got it already or you don't. And that's it. So this name has been on our radar for trend continuation, for breakouts, for bull flag continuation. Right now, I have no position in it. And I'm not chasing price here. It's just not how I roll. The market's in a really interesting spot, right? Because we just had this big breakout like 6 trading sessions ago on June 24th, and we've just been up and away ever since then. And again, just sticking on the same theme, I don't believe in chasing price. If you are buying the S&P now as opposed to buying the breakout 5 days ago, you are putting yourself in a position for a worse risk reward and a lower probability of success. I am both a day trader and a swing trader. One of the things I love about swing trading is that you can do a really good job on one day and continue to get paid for it for days, sometimes even weeks at a time after that. And this is exactly the case. When we had the breakout at the market level on June 24th, you could have bought the S&P, you could have bought the NASDAQ, you could have bought NVIDIA, you could have bought Meta. There were so many things that were breaking out with the market at the same time. And if you swung even 15% of your position, 30% of your position, you're just continuing to get dividends for the hard work, the good work that you did a handful of trading sessions ago. And at this point, it's about trimming and trailing. The market has now gotten moderately extended. We had a big 5-day move higher. I think we need some corrective price action to reset up for the next leg. The cool thing is it's July 1st. We are entering into the 2 most bullish weeks of the most bullish month of the year. I want to be long this market. I want to be getting in here today and telling everybody who's listening, like the rah, rah, rah speech of let's buy everything because of how bullish this market is. The market dynamics look super bullish, but it's just not a good risk reward right now after 5 up days in a row. Be patient. Let patience pay you. Got some swings on, great. Otherwise, let's let this market bull flag out. Let's get a little bit of a dip in this market where we can look to buy our higher low into the 80 MA on the daily chart, something like that. And that'll set us up for the next great risk reward for the next leg higher.
Okay, first of all, that I don't know that you could have said anything more perfect than that. I have been talking about recently over the last couple of weeks. I've been talking about this July period traditionally being very, very positive in terms of seasonality, both for the broader market and as well as some individual names. In fact, one of them is Home Depot and Lowe's, and I'm actually in that swing right now. I absolutely love this because I've been setting this up. And when I sat down at my terminal this morning, I'm like, okay, July 1st, the seasonality. I look at the market here. Oh, everything's in the red. How perfect is that? Makes a lot of sense to me. So your situation there about let's let this bull flag, let's not chase multiple green days of performance. Let's actually wait for a little bit of a pullback and position for the swing going forward. That is absolute perfection. That is, I think, exactly how we should do this. I love that you open there with you can't possibly chase Hood if you're in it. That's perfect. Absolutely fantastic. So let me know or maybe you don't even have this. Do you have anything on a list? If we pull back just slightly here, or if we trade sideways here and maybe reset some of these overbought indicators, what's on your list for the next swing long here?
Sure. So first of all, honestly, my initial thought process is, can I make any money short on a little bit of corrective action after 5 days higher? Those counter trend trades are always going to have a lower reward profile, but there's a couple names that I think are interesting actually on the short side for if the market can pull back as we go into the setup for the next big long trade, which I know that's your actual question, so I'll answer that as well. But real quick, I actually have Palantir on the short list for today. If you look at that sell candle from 2 trading sessions ago when it got absolutely and utterly rocked on the sell imbalance with the Russell shuffle, that broke the uptrend. It's a bearish engulfing candle. The stock is expensive fundamentally, which it deserves to be expensive fundamentally because it's a great company and it's been the only game in town. But interestingly enough, maybe all of a sudden it's not the only game in town anymore because it looks like OpenAI is stepping in to try to compete with Palantir on some of these AI related military style government contracts. We've seen a couple instances of that already, where all of a sudden Palantir actually has competition, it becomes very hard to justify the valuation at the same time when we just got a bearish engulfing candle followed by an inside day yesterday. So I kind of like Palantir short for continuation through 135, especially if the market gives us a little bit of corrective action, and that could potentially help the trade. One actual short-term short for you, and then we could take a look at some longs. I think if CoreWeave loses 160, that could be setting up for a bigger pullback as well. We got a couple upside tails in a row there for the last two trading sessions after it peaked out above 180. Has to really get below 160 in order to trigger. It's been a high flyer. Circle we had on our list just because it got absurd into $300. That turned into a pretty good short that my team and I were involved in. That trade, in my opinion, this thing could easily pull back to 150, but the easy money on that trade is gone. I want to see if CoreWeave, very different company, but similar because they're both in the recent IPO category, can kind of give a little bit of a similar breakdown. If it loses this 160, you could be testing the 140 support level pretty quick. So I've actually got those two names on my shorter term list of the short bucket. And then flipping back to what you were just asking me, when we get the pullback, what do we want to buy? I think we want to buy semiconductors. And I actually think that we want to buy small and mid caps for a catch up trade. I think when the market gives its next leg higher, that it's going to be marked by a lot of short squeezes. And the short squeezes are going to manifest themselves in these IWM names. They're going to manifest themselves in those, whatever the crazy stock of the day is, right? You got to do your research every single morning to figure out what's that name that could break out and give the 100% move over the course of the next two trading sessions. I think that that's what we're going to be seeing in July. I think that we're going to be seeing long short funds that are still too short getting absolutely squeezed in some small caps and mid caps as the market grinds higher, and the IWM actually takes over some leadership and plays some catch up. So AI, small caps, mid caps, IWM, short squeezes, a lot of money out there for momentum traders, I think, over the course of the next few weeks here.
Okay, that would be awesome if that's what we get. I sure hope that's exactly what we get here. Here's a look at the IWM. We actually have this sitting pretty much right at the 200-day. Would love a breakout from here. You also mentioned semiconductors just a second ago. Here's your semiconductor move. In addition to us being at the highs, we actually have golden crossed here today. Did we actually do this yesterday? We might have done this here yesterday. So SMH looking pretty good there. And then I love it. Palantir on a corrective move back down. Boy, we've been talking about Palantir here. This thing is 50 points. 50 above its 200-day moving average. A pullback here could get wild. And there's another possible short call there on CoreWeave. I hope one of these, at least one of these, ends up working out there. Okay, we are with Derrick Oldensmith. I don't know what happened to his camera, but I can assure you he's here. Trade with Derrick all next week for free in his Pro Desk virtual trading floor, July 7th through July 11th. The QR code on the screen will do all of that. Good morning, Manny. Good morning, Ryan. All right. Really good stuff there, Derrick. You got anything else that's kind of stands out here to you?
There's the video back. I don't know how I lost that there, but I'm back. Those are the main things I'm looking at, is just let's get this market pullback to give us the setup for continuation in July. I academically like to be bearish, but when you look at the market structure right now, vol control is going to be buying. There's going to be positive gamma that's going to be insulating any downside moves. It just seems like this bid is unbeatable for at least the next 3 weeks, if not until mid-August. There's plenty of academic reasons to want to be bearish right now, but don't fight the technicals. Don't fight the flow. When we get extended to the upside, take some profit on longs, maybe put on some cute shorts that could last for a day or two. If you got something that's relatively weak, you can make a few dollars for yourself, but otherwise, let's continue to push this to the long side. And maybe next time you have me on as a guest, it'll be It'll be in late July or early August, and I'll be talking about maybe it's time for us to actually have a real sell-off.
Okay, I absolutely love it. A little bit of foreshadowing there. I was at Izzy. This is a great question. I was actually going to ask something very similar. So we're going to go with one more question here from the chat. Ryan, what does he consider a pullback? How much? What I was going to ask you is if we start trading down here in the SPY, what level are you looking at where it's like, okay, this is a pullback, but we really don't have to reassess our plan here. We just kind of go along with it. Is it a particular moving average? Is it a particular level? How do you factor that in?
Yeah, so somewhere between the 8 and 21 EMA. The 8 and 21 EMA for any chart on any time frame that I'm looking at is what I consider to be technical equilibrium. So right now, as an example, the SPY is trading at 616, basically. The 8 EMA is 610 spot 50. The 21 EMA is 602 spot 20. So the upper band of equilibrium is 610.50. So in a shallow dip, in a shallow price correction, 610.50 would be the spot where I would begin to look to buy, though it could be as deep as 602 quarter. A great spot might be if we overshoot the 610, a retest of 605, which is where we broke out from. So I really like that 605 to 610 area, basically starting with the 80 EMA on the daily chart all the way down to a retest of the June breakout that we just had. That space will be the space where I'll really be looking to cover any of those shorter term shorts I'm putting on because of the market upside extension and look to layer back into the longs.
Okay, that is phenomenal. 605.06 is the actual value that I have from that June breakout. I'm with you there. We'll just call it 605. I'm going to go ahead and mark that on the chart too. Great stuff there. So those EMAs, the 8 and 21 EMA gives you a value of 602 to 610 roughly. And so you're looking for a pullback somewhere into that range. Okay, that's about as actionable as it gets here. Derrick Oldensmith from T3. Trade with Derrick all next week for free in his Pro Desk virtual trading floor, July 7th through July 11th. Derrick, I got to ask one last question before we get you out of here. Are you a Sparklers guy or are you an M80 guy for 4th of July? What do you like the most?
I like to keep my fingers and toes, so I'll stick with the sparklers.
Okay, that's a good answer there. I like that too. That's a good, our first PSA of the week here, folks. If you explode something this weekend, make sure you keep all your fingers. You're going to need that there for trading. Derrick, we really appreciate it. Thanks very much. I do look forward to having you back here. Can't wait to see what the next market move is the next time we have you back. Enjoy your holiday. Okay, boss?
Thanks, Ryan. You too. Talk to you soon.